Freelancer math shock. Make $60,000 and there is a hidden 15.3% tax waiting. It is called self-employment tax, and most people forget to budget for it. If you ignore it, the bill shows up at tax time like a fast punch. Miss it, and your cash flow gets crushed by surprise. Plan for it, and you keep your Social Security credits and your sanity. No scare tactics, just clear steps to stay ahead. Quick guide. What self-employment tax is, who it hits, how to do the math, and easy ways to not overpay. By the end, you will know your number. Grab a pen or just your mental math. Self-employment tax is simply Social Security and Medicare for people who work for themselves. Employees pay it through payroll. You pay it yourself. Different name, same purpose as the payroll taxes on a paycheck. Think of FICA like a two-handle water bucket. At a job, you and your boss each hold a handle. As a freelancer, you carry the full bucket. The bucket is heavy, so planning your grip matters. That is why the rate is 15.3%. It is both halves, 12.4% for Social Security and 2.9% for Medicare. Once you see both parts, the 15.3% finally makes sense. There is also an extra 0.9% Medicare surtax at higher incomes. We will flag it later so you do not overpay or underpay. It only applies when your combined income gets high. Key point, this is not income tax. Self-employment tax stacks on top of income tax, so you need to plan for both. That is why many new freelancers feel two taxes at once. The IRS calls it SE tax, and it tracks on Schedule SE. Your number comes from your business profit on Schedule C. One form does the math, the other supplies the profit number. Who owes it? Anyone with net self-employment income of $400 or more for the year? Yes, the trigger is low, so side hustlers are included. That includes freelancers, gig drivers, Etsy sellers, consultants, coaches, and single-member LLC owners. Active partners and partnerships usually owe it too. If you actively run the business, you are in the zone. If you only have W-2 wages, payroll already handled these taxes. But a side hustle pushes you into SE tax on that profit. A tiny Etsy shop or Uber route still counts if profitable. S-Corp owners pay payroll tax on their salary, not on distributions. Pure rental or hobby income usually does not face SE tax. Know your entity and income type before you start the math. Start the math with Schedule C profit. Revenue minus ordinary and necessary business expenses. That net profit is your starting point. If you do not track expenses, you will overpay here. Then multiply your profit by 92.35%. That discount recognizes the employer half you are also paying. Think of it like removing the employer's share from the base. Next, apply the rates. 12.4% Social Security applies up to the annual wage base, and 2.9% Medicare applies to all of it. Think cap on one part, no cap on the other. Example, $60,000 profit. $60,000 is 92.35%, $5,514. Social Security 12.4% and Medicare 2.9% on that make about $8,468 in SE tax. We will round to keep the idea clear. Smaller side gig? Profit $10,000. Base $9,235. SE tax roughly $1,413. Even at small numbers, it is real money. Small does not mean skip the plan. Social Security tax stops at the annual wage base. For 2026, that cap is $184,500. Income above that only owes the Medicare portion plus any additional Medicare tax. You calculate SE tax on Schedule SE and it flows to Form 1040. Most people also pay it during the year with quarterly estimated payments. If you wait until April, the balance due can sting. Good news, you get to deduct half of your SE tax as an adjustment to income. It does not change the SE tax itself, but it lowers your income tax. It shows up on Schedule 1 as the deduction for one half of SE tax. Why it exists? These taxes fund your future Social Security and Medicare benefits. Paying in also earns you credits toward retirement and disability coverage. So you are not just paying, you are buying coverage for future you. Mistake 1. Treating profit like take-home pay. If you spend every dollar, the 15.3% bill later will hurt. Build in the set-aside as a habit from day one. Mistake 2. Thinking an LLC changes the tax. An LLC is a legal coat, not a tax wand. The math stays the same. Taxes follow what you do, not what you call it. Mistake 3. Skipping quarterly payments. That triggers underpayment penalties, a snowball you do not want. The IRS charges interest-like fees when you come up short. Mistake 4. Using gross sales instead of net profit, or forgetting the 92.35% factor. Both will overstate your tax. Use bookkeeping, even a simple spreadsheet, to stay accurate. Mistake 5. Not coordinating with W-2 wages and the additional Medicare tax rules at higher incomes. Coordination can save you real dollars. Check this if your wages are high and you start a side gig. Mistake 6. Paying SE tax on the wrong income types, like hobby or S-corp distributions. Or forgetting to file Schedule SE when profit is over $400. Read the rules before you label income on your return. Pro tip: open a separate tax stash account. Move 25% to 30% of each client payment the moment it lands. Automation turns discipline into default and keeps your hands off it. Use the 92.35 trick to estimate fast. Example: profit 20,000 x 0.9235 shark 18,470 times 15.3% is about $2,126 in SE tax. Write the number on a sticky note and stash that cash. Avoid penalties with a safe harbor. Pay at least 100% of last year's tax, or 110% if your income is higher. Form 1040-ES helps you plan payments. Safe harbor wipes out most penalties even if your income jumps. Have a day job? Ask payroll to boost your W-2 withholding. That can cover your freelance SE tax without quarterly vouchers. Withholding counts as paid evenly all year, which helps. The best way to lower SE tax is to lower profit with legit business expenses. Track mileage, home office, gear, software, phone, and supplies. Every legit expense cuts the base that the 15.3% hits. Heads up, SEPIRA or Solo 401k contributions reduce income tax but do not reduce the SE tax itself. Still great for wealth building. Combine them with deductions to shape your tax and savings plan. High earners: watch the extra 0.9% Medicare surtax. It kicks in above certain thresholds across wages plus self-employment. Check the current thresholds on the IRS site. Action step: total your year-to-date profit. Grab revenue, subtract real expenses, and get that net number. Do not guess. Pull actual numbers from your bank and receipts. Multiply by 92.35%, then by 15.3%. That is your rough SE tax so far. Move that cash into your tax stash today. If that feels big, remember you are both worker and boss. If you are short on estimates, make a catch-up payment now at IRS Direct Pay or EFTPS. Set calendar reminders for the next quarters. A quick payment now can stop the penalty snowball. List 3 deductions to tighten before year-end: mileage log, home office, and phone split. Each dollar of expense lowers both income tax and SE tax. Small habits now beat big fixes in April. Want to legally lower your profit? Watch Home Office Deduction Explained next. Also see Quarterly Estimated Taxes Explained so you can pay this on time. Subscribe for Daily Taxes Explained. I will link both in the end screen for you.